live from the FMDQ studios here in Lagos. It's Thursday, the 14th of August. I am Bosin Omofai.
And I am Melissa Econ. Welcome, everyone. We thank you all for joining us at this time.
All right, let's get the show started with the Economic Outlook report released on Wednesday by one of Nigeria's integrated financial services company, Norrenberger. The report provides in-depth data on the performance of the global, sub-Saharan Africa and Nigeria economy in the first half of 2025, plus outlook on the second half of the year. Joining me for a drill down into these data is the Managing Director of Norrenberger Asset Management, Pabina Yinkere. It's great to have you here in the studios. Good afternoon. Welcome.
Thank you for having me.
Great. How do you summarize the state of the global economy in the first half of the year?
I think it's pretty much, if I would term it, one of two halves within a half. First half being things were moving gradually, everybody was anticipating it, Fed rate cut, and Trump comes in and spooks the market with the April
2nd
pronouncements, and everything just went in a different direction. But I think coming back full circle now, I think it has changed the outlook a bit, because the thinking is that these tariffs will have an impact on global growth down in the next 6 to 12 months. We're going to have that impact. So it has slightly changed the growth trajectory that one had been anticipating.
Do you think the shock of the July 2nd is turning to a little bit of a calm right now? Globally speaking, looking at what the central banks around the world are doing, as we speak right now in August, the eyes on Fed for September interest rate decision.
Yes. Yes, I think it is, because if you recall, many of the discussions had been around tariffs and counter tariffs and reciprocal tariffs, but I think all of that has faded away. Both sides, whether US and China or Canada, they've been able to meet and have an agreement. So I think it calms nerves a bit. But again, the repercussions PPI inflation data today, it was way off market expectation, 0.9 for the month compared to market expectation of 0.2. That's one of the widest we've ever seen in recent times. So you begin to think that it's issues like this that is beginning to feed through to prices.
Even the inflation that came in 2 days ago for the US also showed a bit of 2.7. Yes, a little tweak. Yeah. But if we bring it to sub-Saharan Africa, it's surprising. Are you surprised? And I saw that in your report, that Africa is showing some resilience despite the shocks, globally speaking. And it looks like even on inflation conversation, it looks like we're treading a bit of a trajectory that's giving us a bit some of the central banks in Africa the room to cut, like the Central Bank of Kenya, South African Reserve Bank, and a few others.
Yeah, the Africa story has been good. This is anchored on commodity prices, right? Many of the African nations are commodity exporting nations, and as you can see, we've seen improvement in commodity prices. Whether you're looking at Ghana, gold, cocoa,
Zimbabwe, for example.
Zimbabwe, for example. So even Kenya, so the story has been one of good. What we find interesting is that the inflation picture is looking way better than it did last year. Currencies are looking way better than they did last year. I mean, Ghana currency is a good example, the poster child for currency performance.
The star of Ghana.
If you wish. Yes. So I think
about 40%.
Yeah, 40% in appreciation. So the story has totally changed. This was Ghana, where people were worried that, hey, with all of the debt issues and having to restructure the debt, which was a technical default, but I mean, Ghana is looking prettier today. Nigeria is looking prettier today.
Interesting. So if we take it all the way down to Nigeria, bring it home for me when it comes to Nigeria. What are the highlights of your report for the first half with a bit of outlook on the second half? Again, give me what is the Nigerian story here within the global and sub-Saharan African story?
The Nigerian story is one of recovery. Like the title says, the great recalibration. So, but I think many people would question, is the man on the street feeling these improvements? Like we say, it's with economics, there's always a lag time, right? But I think, if anything, for the fact that a good example would be banks now allow you to use your Naira card for foreign currency transaction. That disappeared in the last couple of years,
exactly,
under the previous administration. So there are some green shoots which I think we can consolidate on.
You think we've seen some? We think we've seen some policies. I'm not talking about the FX subsidy and exchange alignment. We saw a few signing new acts in the market. Yes. For example, the ISA, the insurance. Yes.
A lot of them have been done. And what it tells you is that it's a government that is focused on driving growth, on letting private sector move and run with the economy. I mean, we've seen many of them, from the tax act reform to even the pension act or SEC, insurance. So, you could see attention across different sectors.
I get that.
And if you look at it again, I think one of the things that can catalyze an economy is real estate, right? And you can see what the government has done with a MOFI. You can see what the government needs to do with a family homes fund, a role that a federal mortgage bank needs to play. I think there's enough room for all of these entities to provide sustainable mortgage opportunities for Nigerians at cheap rates for Nigerians to key into. So I think the government needs to do more, capitalize this company, these entities, support them so that they can, because that's really one of the engines of economic growth, real estate.
You're the chief executive of an asset management, so I'm sure you know how money moves. And that's why you're here. You see the money moves. But again, how does money move? The equity market did very decently in the first half. The fixed income market was also starting to cruise. So what does that tell you about the second half of the year? How do you see investment opportunities for Nigerian investors, foreign investors in Nigeria, and whether they want to play equity or they want to play fixed income?
Money follows return. That's how money moves, right? So the asset class that provides the best option is where the money moves to. And if you look at it from the equity side, it looks like it has run a bit. I still think the gains from here on in equities will need to be selective, will need to be reform-driven or sector initiative-driven. Fixed income, I think, still holds some potential. But what we are seeing now, I don't know if you're aware of it, the Minister of Finance announced today that the government is targeting to raise $4 billion to settle power debt for power companies.
Yes, for power companies, yes.
Through bonds. That has spooked the market today, so yields have climbed back up again.
So fixed income.
For me as an investor, whenever I see prices fall, it's an opportunity to jump in, right? I'll never miss that opportunity. So I think the fixed income market will still play a lot. But I think for the second half of the year, investors should be focused more on balancing their portfolios. Diversification remains key. A little bit of equities, fixed income. If you can get exposure to the alternative space, do that. And for the retail investors, instruments and vehicles such as mutual funds will continue to play a viable role in them accessing good returns.
Interesting. Well, we're going to be touching base with you as we move on to the rest of the second half of the year. We're 2 months already, or thereabout, into the second half of the year.
Yes.
So we're going to have a lot more time to digest what you're coming out from Norrenberger Asset Management later towards the end of the year. We'll begin to look at the year as a whole and all of that. It's good to have you here.
Thank you for having me.
Thank you very much, Pabina.
Thank you for having me.
Yinkere, who is the Managing Director and CEO at Norrenberger Asset Management. Let's go for the rest of your Money Moves news now. Melissa Enoch is standing by the FMDQ archives. Hi there, Melissa.
Hello there, Bolton. That was such an interesting interview. Thank you both so much for that. Let's now move on to the news on News Now. Earnings roll continues across Frontier Africa on Thursday. Standard Bank, the continent's biggest bank, announces a 10% jump in its headline earnings, reaching 24 billion rand. The big lender reports a 19.1% return on equity based on a strong balance sheet, higher fees, trading revenue, and cost control. The bank says its subsidiaries in Angola, Nigeria, and Kenya delivered solid gains alongside record investment banking, activity in energy, and infrastructure. Still on earnings, Kenya's banking group KCB has declared an interim dividend of 2 shillings for 2025, plus a special dividend of 2 shillings. That brings the total interim dividend to 14 billion shillings, the largest payout in the history of the Nairobi Securities Exchange, the boss says on Wednesday. KCB posted a post-tax profit growth of 8% in the first half of this year, while net interest income climbs 13%. Let's now hear more on those financials.
For H1 closed at just under 2 trillion, 1.969 to be precise, which is a 7% growth if you do like for like. Remember, we've talked about selling NBK. So NBK was in our balance sheet the whole of our consolidated numbers the whole of last year. But since we sold NBK 30th of May, we do not consolidate for H1 on the balance sheet side. That goes to the new owner. So like for like, 7% growth on total assets. Deposits looking flat at just under 1.5 trillion. But on a like-for-like basis, the deposits grew by about, I think, just under 6%. Our digital channels, our branches, you saw, the second slide from Paul, showing our footprint in terms of branches, our digital channels, played a very pivotal role in deposit mobilization. But that was tapered by the transitioning of the Uganda's portion of the G2G that happened at some point last year. So we did have the deposits when the G2G was being done in Kenya, and that left towards around mid last year. So again, there's a bit of a like-for-like comparison to be done there. For H1 close.
Let's now bring on some rate decision on news now. The Central Bank of Zambia held the country's benchmark rate at 14.5% on Wednesday. It is the second consecutive interest rate hold by the Zambian Central Bank this year, after the regulator lifted the rate by 50 points to 14.5% at its meeting in February. Let's now listen to the governor.
This time, we do have a number of factors that we took into account to arrive at that decision. First, since the last monetary policy meeting that we had in May, inflation has been on the downward trend, falling to 14.1% in June and further to 13% last month, July. Two, inflation is now also projected to fall within the target band from the first quarter of 2026, that's next year. Third, while recognizing these positive developments, the committee noted that at the current level that inflation is at the current level of inflation, we note that it's well above the 6 to 8% target band. That's about 5 percentage points. And at the same time, we note some uncertainties that are stemming from the global trade policies that are being pursued, and then there are persistent geopolitical tensions. Fourth, the committee also observed that although market expectations of inflation have moderated, they remain high relative to the target band.
Finally, in South Africa, the Minister of Electricity, Kosienko Ramohopa, has provided an update on the state of the country's power sector, and in particular, the move to revamp the utility giant Eskom. Let's now hear excerpts from the Minister's latest press briefing.
But when we take it closer, remember I'm averaging it since the beginning of the financial year, the 1st of April to the 8th of August. What has been the performance in the recent past? So recent past, really, I'm talking about the 14 days or so. We say that the EAF is, in fact, continuing to give us, if you like, spectacular results. That at some point we even breached the 70% mark in relation to performance of EAF. This is significant, it's a psychological mark. Remember that the shareholder, as part of the shareholder compact, so this is an agreement between government represented by the Minister of Energy, that is myself, the agreement we enter with the Eskom board. We have said that for the current financial year, we want to get the EAF to about 70%. And we're beginning to see these green shoots. Green shoots in this instance, the team has illustrated that it's possible for us to achieve that 70% EAF. And then we have breached it in that period. What is the average month to date? What is it that we have performed over this period? We are sitting at 65.38%. So I think it's important that we have this appreciation. We are moving in the right direction. But when we are...
I am Melissa Enoch, and that's it on News Now. Stick around for our market rounds with Boasting at the Ticket Tape Room.
All right, we're back with morning moves as we look ahead of tomorrow's Friday, the final trading day of the week. I am Boasting number 5. Let's get into the markets, straight into equities trading day. I'm going to start from South Africa. News coming through from the GSE now. The Standard Bank is announcing that 2 of its executives will be leaving at the end of 2027. The Chief Executive Officer, Shabalala, and the Chief Financial Officer will be leaving, according to Bloomberg News just a few minutes ago. Both of them have served in their previous in this current role for nearly about a decade or so. Standard Bank just released some robust earnings, which we showed you on the show a bit earlier. So keep that in mind. Standard Bank just made this announcement. Of course, part of those robust earnings came from Angola, from the subsidiaries in Angola, in Nigeria, and other parts of the continent. Standard Bank, the Africa's biggest bank, operates from across 21 countries on the African continent. The GSE today, go back to the markets as it were, broadly speaking, 0.5% in the red for the biggest exchange on the continent. And of course, you have the Nairobi market, however, 0.87 in the green. Nigeria continued from where we were yesterday and a bit of a bearish run, 0.34%. Some deceleration coming into the equities market. You heard from Pabina Yenkeri of Norrenberger Asset Management earlier that the market on the equity side in Nigeria seems to have had its run so far. Perhaps this is some time for you to take some money off the floor before the market could come back before the end of the year. We're now at the early part of the second half of the year. The Zimbabwe market today down by about 0.1 or 5%. The Sendex up by 0.31% and the BRVM up about 0.5 or 5%. We got a couple of earnings driving the markets across the continent with the KCB group reporting today. Saw that on the show earlier on the Nairobi market. So you see a very strong round, 164.38 on the NSE in Nairobi. Take it up and let's look at the yield on the government bonds today. The South African 10-year paper, 9.610%. That's a bit of a flattish. The Kenya 10-year paper, however, was printing 3.92. That's 0.01. The rest of those 10-year paper that we cover on a flattish note, according to investing.com, 13.14 GMT. Take me to currency space and check through the South African rand today, bleeding about 0.55% against the US dollar, 17.65 for the supranational currency, the rand, the dollar on the rand, 17.61. The naira recovered, however, look at the bottom of the table, the naira better by 0.03% on the dollar, 1,531.28. CFA franc West Africa, 0.28%, a bit of a recovery on the dollar, 561.07. Shilling, 129.20, staying around flattish, and the Egyptian pound 48.32, a flattish Thursday. Of course, the markets are closed today in Cairo until Sunday, when the markets in Egypt will reopen for the start of the week. The rest of that region will reopen on Monday. So it's the start of the weekend today from in Cairo, Egypt, by the way. Let's move on to the commodities. Oil prices begin to move up, as we saw late Wednesday, as it were, as everyone begin to consider what will be the outcome of the meeting tomorrow between U.S. President Donald Trump and his counterpart in Russia, Vladimir Putin, the meeting between President Trump and European leaders, as well as President Zelensky of Ukraine. What will that mean for the global oil market? Then, of course, you've got the U.S. inventory out on Wednesday as well, looking at the U.S. Crude inventory up by about 3 million barrels per day, which is a whole lot bigger than what Reuters had predicted. The International Energy Agency also talked about the supply glut that could be in the market moving into next year, but holding demand, as it were, the demand forecast is a little bit tapered lower. So let's get out of the energy space and go into metals. Gold lost about 0.25%, 12.55 GMT, $3,400 an ounce. Copper printing 4.46, down by about 0.25%. Platinum sharply higher, 1.4%, while iron ore trading about 0.37%, better around 102.03. Finally, in soft commodities, look at the cocoa prices, 8,445. 1.32% haircut this afternoon. So far today, 12.57. Coffee prices jumping up, 311.75, but slightly lower by 0.29%. These are futures prices. Palm oil is not letting go of us newfound love, $1,000. That's a 1,048.07 when we put the numbers together, 12.57. Sugar prices down by about 1.5%, 16.60. Early today. So let's keep those numbers in mind as we say thank you for watching your Money Moves this Thursday, the 14th of August. I am Boston Amofaye. From me and the rest of the team here at the FMDQ studios in Lagos. We thank you for watching and we'll see you next time.